What's going on, guys? My name is Nick, and if you're new to my channel, welcome to Investing Engineered. So the topic of today's video is why I bought over $1,600 of this one dividend stock that I'm about to reveal to you. Now, before I get into this video, I just want to say that this is not me trying to boast about my investments or anything of the sort. I just want to provide you guys with value. Personally, I just really love it when people are transparent about their investments, especially on YouTube, because the learning for other people looking for new investments can be incredibly valuable. But at the same time, I do want to show you guys that I do put my money where my mouth is. I'm not going to preach about investing and buying the dip when a stock market crash happens without actually showing you guys that I do apply my own strategies. For that reason, I do hope that this video will provide you guys with some valuable information and the reasoning behind why I chose to buy this amazing dividend stock. And if you do enjoy the video, be sure to smash the like button for me and subscribe for more content in the future to support my channel. So without further ado, let's jump into why I actually bought this dividend stock. Alright guys, so the dividend stock that I recently chose to purchase is the Bank of Nova Scotia, ticker symbol BNS.TO. Now, if you're unfamiliar with that notation, the .TO simply means that the stock appears on the Toronto Stock Exchange here in Canada. However, if you are from the US, it does also appear on the New York Stock Exchange with ticker symbol BNS. So I'll just throw some screenshots up here so you guys can see exactly how much I bought. I made a limit order purchase of 25 shares at an average cost of $67.75 per share here on Questrade. This led to a total cost of $1,693.75 before a commission of $5.04. Now, if you are wondering why I made a limit order purchase, this is just to be able to protect myself from market fluctuations while I'm buying the stock. And this only came at an additional cost of 4 cents in the commission, so it's definitely worth it. In the future, I'll be showing you guys exactly how to make a buy order of a stock or ETF on Questrade. But for now, let me explain my rationale for buying this stock and exactly how much I get paid in dividends per year. Alright guys, so the first reason that I considered buying this stock is because of the sweet dividend that it offers. Now, before I get any haters, I just want to clarify and say that this is obviously not the main reason why I bought this stock in the first place, but it did make it a lot more attractive on an investment basis. So currently, the Bank of Nova Scotia is offering a quarterly dividend of 87 cents per share, and on an annual basis, this is $3.48 per share. This ends up corresponding to a current dividend yield of 5.1%, which is absolutely mouth-watering. And if you're unfamiliar with what the dividend yield is, it's essentially the amount of income that the company is going to pay you per year based on your invested capital. So the amount of money that I'm going to be getting from this investment each year just in dividends is going to be 5.1% times my cost basis of $1,693.75, which comes to a total of $86.40. Now, this probably doesn't sound like a lot of money to you, but it doesn't include any of the capital gains that I'll probably be receiving on the shares. And it also doesn't take into account the dividend growth rate every year, in which Scotiabank has shown amazing performance in the past. Scotiabank has continued to increase their dividends for 43 out of the past 45 years, which is one of the best and most consistent performances in the Canadian stock market. So over the past 5 years, this has corresponded to an annual dividend growth rate of over 6%. And as we can see from previous trends, the company is likely to increase their dividend even further above 87 cents per share when they report earnings next week. Furthermore, another metric that I look into closely before buying a dividend stock is the dividend payout ratio. Scotiabank's current dividend payout ratio is only 50%, meaning that they pay out 50% of their earnings in dividends, and then they reinvest the other half back into their business. This payout ratio is very healthy in my opinion, because even if their earnings decrease, say in a recession, they'll have plenty of room to continue paying these consistent dividends. And as a long-term buy and hold dividend investor, that's exactly what I'm looking for. Alright, moving on to the second reason why I decided to purchase this stock, and that is due to its valuation. As a value investor, I'm always looking to find stocks that are priced below their intrinsic value, and notice here that I distinguish the difference between price and value. Buying a stock under its intrinsic value provides the investor with downside protection because the stock is already so cheap, but also provides increased upside when things turn around. So in the case of Scotiabank, we can find that the stock is currently trading at a price to earnings ratio of 10, while its price to book ratio is only 1.3. Considering that these are some of the most important metrics to look at for a value investor, and Scotiabank is low in both, This is a very good sign. Also, when comparing these numbers to the company's 5-year history, we can find that the company is trading much cheaper in 2019 than it has in the past. We can also find that the price to earnings ratio and price to book ratio are much lower than the industry average of 14.76 and 1.76 respectively. So overall, I personally view the company as undervalued compared to both the company's 5-year history as well as the industry index benchmark. Alright, so thirdly, it's very important to look at a company's historical performance to be able to see if management is able to efficiently and effectively put the shareholders' capital to good use. From Scotiabank's all-time chart, we can find that the company has performed extremely well in terms of historical stock performance. However, now when we zoom into the 5-year performance, we can find that the stock has actually gone down and really hasn't provided many returns for shareholders. So when the inexperienced investor sees this, he or she might think, I probably shouldn't invest in this company because it really hasn't done that well in recent history. But there are 2 things that you need to consider before coming to this conclusion. The first thing is to ask yourself the question, is the company paying a dividend? Now in this case, Scotiabank is paying a dividend, and it's a very good dividend, and it actually adds to your returns every 3 months. But the second thing to consider is how have the earnings performed over the same period. Now in Scotiabank's case, we can find that the earnings have been increasing over this 5-year period, despite the stock price declining. So now when you look at the past performance in the past 5 years, it really doesn't matter that much because you're gaining both a dividend, but also the company is becoming more and more profitable every single year. Alright guys, so the 4th and final reason that I decided to purchase Bank of Nova Scotia stock is not because of the company itself, but because I'm very bullish on the banking industry as a whole. Banks are totally opposite from the rest of companies out there because they actually benefit from rising and higher interest rates. And that's exactly what we're seeing right now relative to the past 10 years. Banks benefit from these higher interest rates because it allows them to loan money to people at a higher interest rate and increase their net interest margins. Now, a bank's net interest margin is simply the difference between the interest rate that the bank can charge someone else for taking its money and the interest rate that the bank is charged for loaning money from the nation's central bank. And this net interest margin slowly rises with increasing interest rates, and that means that the bank makes a little bit more money on each loan that they provide. So after climbing for several years now, Canadian interest rates are set to remain steady despite the declining rate environment in the United States. So the banks should prove to perform well as long as interest rates hold up. But even if interest rates do drop, this will simply ignite a fire under people to get more mortgages and loan more money because money will become so cheap. So banks might hurt for a short period of time in the upcoming recession. However, over the long term, banks are always going to do well because people are always going to need loans for their homes and investment properties, etc. And this will only increase further with growing populations into the future. Anyways, I hope you found this video entertaining and actually gathered some valuable information on why I bought Bank of Nova Scotia stock. And definitely let me know in the comments down below if you do plan on buying this stock in the future. So if you did enjoy or gain value from this video whatsoever, just smash the like button for me. That would be much appreciated. And if you haven't already, you'll definitely want to subscribe for more content on personal finance, business, and investing in the near future. Until next time.